Um, I would like to welcome Mr. Sukant Das. I think he's already here. Hi, Mr. Sukant. Are you here?
Yeah, yeah. Hi.
Yeah.
You can hear me all right, I suppose.
Yes, okay. So thank you for joining. And yes, so let me give audience insight about your session. So in this session, Mr. Sukant will be presenting the overview of AI trends and use cases about financial service customers, AI strategy for adoptions. And let me give him background. So he is a director sales finance service of Manila UAE. He has over 20 years of experience in digital and technology transformation, and he's passionate about leveraging the cloud technologies, enabling it for digital transformation, for business growth, and so on. So now over to you, Mr. Shukant.
Yeah. Thank you so much, and I welcome everybody to the session, and I'm very glad to be joining this session. Let me first share my slides, and then we can walk through
Yeah,
the
we can see your
presentation.
screen.
Okay. Right. So yeah, I mean, thanks for the introduction, and I think yeah, I've been in the consulting industry for almost 2 decades. Worked with some of the very large consulting firms, mainly in the area of technology and digital. I'm based here in the Middle East in UAE, and AI is obviously the most important service offering that we are all focused on. And I'm particularly associated with the banking and capital markets sector, so which means that most of my clients are either banks or insurance organizations, or even investment houses and so on. And one of the key change for that we are seeing is that there is a large traction on AI, which we will be talking about in terms of the industry adoption. And and being in the forefront of this nice intersection between technology, digital, and industry, I can share my unique perspective with you guys. If you want to stay connected, my LinkedIn profile is above. You can look me up in LinkedIn, and I'm more than happy to connect and share my experience and perspectives with you. All right. So the session for today is. So I thought of focusing on three areas, right? Obviously, need to share with you how I see, and how my organization sees, AI being adopted in the banking sector. And so we will share with you some insights, some research data, and then you can further explore that to go much deep into it. We'll then talk about when we say AI, Gen AI, traditional AI, all of this. What are the usage of this technology? What use cases are quite popular, and where are clients investing their money on, right? So we'll talk about some of these use cases. Again, we will take a research based perspective, so that we will find common use cases across the globe. Okay. And what leading and leading industry veterans are talking about. And then I'll also deep dive slightly into one example of lending, which is a very highly important function within banking sector. So we can just maybe not go too technical, but probably just keep a little more focused few minutes discussing about how we can implement a artificial intelligence in lending, and what are the benefits and challenges. And then obviously I'll end the session with giving you, since I'm more as a consultant, and clients typically ask me, okay, all this is fantastic, but how do I approach to leverage AI for transforming my organization? How should I implement AI? What risks I need to consider? What are the governance that mechanisms that I need to place? So they need a holistic point of view and a perspective from consulting firms to lay down the big strategy for adoption. Obviously, in the session we can't. go into every facet of nuance of that transformation strategy, but I will try to give you a high level perspective on what is a high level strategy looks like in terms of adoption. And then as time permits, we will spend a few minutes on any answering any questions and answers. Okay, so that's the agenda. So let me come to what's happening in the banking sector. And then this is a global phenomenon, and it is not specific to Middle East or Asia Pac or any region. I'm just giving a general point of view. And having been associated with Avanade and Avanade, which is the Accenture organization, so we have global insights, and we produce a lot of thought leadership material and industry research, especially in artificial intelligence. We are one of the leading AI consulting companies. Avanade specializes heavily in Microsoft. You heard the previous speaker talk a lot about that. So we work very closely with Microsoft, in implementing AI solutions. I am personally involved, and what we really see, I mean, if I want to start with giving you a holistic picture, and this is a research snapshot of a research that Accenture, which is our parent organization, did with the World Economic Forum, and they looked across different industry sectors, uh, and what was the objective of this research? They were trying to see across industry what is the percentage or what is the propensity of these clients or sectors in terms of how much they can automate, how much there is potential for augmentation. When I say augmentation, it means like, putting in an agent instead of a human to do the job, right? For example, a bot for customer service, for example, right? So how much AI can automate in terms of business processes, what is the potential for augmentation of bots in place of human workers. And so these were the two main things, so the dark purple and the lighter purple basically track this. Okay, and then what other areas are absolutely not important, for example, very low potential, cannot be handled by LLMs and so on. And we did this across several. You can see the list of industries, starting with banking, travel, technology, everything, right? And stands out that banking actually is on the top, right? So which means that banking is the most one of the most, as per this report, the has the highest potential for using AI to do automation and augmentation. So which means collectively, if you add 73% of working hours in the banking industry could be transformed entirely by large language models, the likes of ChatGPT, Llama, and so on and so forth, right? It's not specific to Microsoft, but generally speaking. And 39% of your the employee's time, okay, can be automated. You mean like if you are, spending 40 hours or 30 hours of yourself doing some specific job, sorry, 100 hours, let's say, 40 hours or 39 hours of that could actually be entirely eliminated or can be done by a machine, right? This is hard research data. And 34% of that time as well can be done by a bot. So either you can automate with using a machine learning model or stuff like that, or you can have a bot or an agent do that job for you. So which means that the potential for banking is significantly high, and across the different industries. And within that we have found this kind of data. Of course, then there are other industries also which have, but since I'm more focusing on banking, I will highlight the banking potential for you. Okay, and there is this, you can access this report, the research report. It's in the public domain, and if you go and search for this report, you will get it. You'll It's a detailed report, but I just wanted to share some more insights, about this report that you just want to keep in your point of view. The first thing we talked about, what is the growing impact of AI on financial services, also for financial services firm. As we discussed, about 30 to 39% of of business processes can be automated using generative AI, and you can also augment a bot for 30 to 34 to 37% of it. So that is taking you overall AI adoption potential to about 70% plus, and that's a significant number. That's one key finding or the insight we get from the report from the industry benchmarking report. The second one is that there is a projection, in terms of dollars, right? How much investments are banks going to make, and what is the strategic shift they are going to have? So it's very clear from the report that the AI spending, which was around $35 billion in back in 2023, just a couple of years before, is projected to reach around $97 billion by 2027. So you can imagine that this is more than 2.5 times in just a matter of 4 years, right? So the focus is shifting from efficiency, right, to revenue growth, which is very important. Banks want to grow their revenues. They just don't want to have, I mean, efficiency is definitely important because it helps them in cost savings, etc. But they want to also have new products, new services to customers, right? So AI is going to help them achieve that through the revenue growth. And 70% of executives are expecting direct impact. So here it's not a cost saving technology at all. So it is about bringing efficiency, productivity, but also revenue. So that's a very important driver for adoption of AI. And lastly, the report also talks about there are challenges. I mean, you heard Arrow talking about security and all of these, and definitely there are a bunch of risks and issues that need to be addressed. This is a new age technology. It's not foolproof. It has got its own limitation. There is a risk of bias, inefficiency, cybersecurity frauds, privacy, and all kinds of issues that comes up with a new technology. So it's filled with that. Okay. So the any advancement in LLMs here, this is a fast changing industry. So a lot of risks are emerging. A lot of risks. There are a lot of mitigations that are coming up for different I didn't known risks, right? So there are known risks and unknown risks. Known risks have there is a lot of research going on how to mitigate the known risk, but then as they on new risks are also emerging. So or the old risks are emerging in an absolutely new format, right? So risk and governance and ethical AI, these are the key considerations of CIOs, right? So they do want to embark upon AI, start implementing, this to gain this revenue, but they also want to put the proper guardrails, the proper security and governance mechanisms. They need to have proper policies on ethical AI implementations. All of this is very important from the banking sector leadership perspective. So they want to make sure that they have a very very well defined, crafted adoption strategy in place, which looks at the um, uh, complete landscape of AI adoption. Yeah, so that's important. So this report, I would recommend all of you, to go through this report. It's available free of cost, and it sort of really gives you a very very distinct view on how the AI adoption looks like for the banking sector. All right. So with that in the background, right? Let's also see what is the industry focused on, and where are the big bets, in terms of investment, right? Okay, we want to adopt AI for, but to do what, so the use cases, and there is now a plethora of research on use cases across leading banks, including Citigroup, Morgan Stanley, JP Morgan, even in a large number of Asia Pac banks, and also consulting firms have been doing research and publishing this research. So a lot of it is available in the public domain. I thought of looking at it from the lens of Gartner, because they're a trusted, well-known IT thought leadership house, research house. So they have shared a sort of what they call as prism, use case prism for Gen AI adoption. Okay, and what they have done is they have looked at different business processes, use cases, but they have applied it across two different dimensions. Okay, so one is the business value, right? What is the value or the the dollar value I'm going to get in terms of a return on investment if I implement this use case using AI? And second is how feasible it is, technical feasibility, risk and compliance, because banking is a regulated industry. So what is the feasibility of those use case for implementation vis-a-vis what is the business value, right? So Gartner has done this research, okay, which is a good reference framework. And as you can see, there are a lot of numbers and high-level bullet points. These bullet points are nothing but the use cases. For example, frontline AI Copilot, avatars or virtual finance influencers, customer churn prevention, loans processing, and we'll go into loans as to deep dive a bit into as a use case. So all of these have been ranked as high, medium, low in terms of value and high, medium, low in terms of feasibility, right? So Gartner recommends that select those ones which have a balance, right? Which have high value but are also feasible in terms of technical feasibility that you can implement. So there's no point picking up a use case which is, let's say, very high return on investment, but it's not feasible to implement. So why would you take that? So park that for the future discussion. Similarly, something is very easy to implement, technically feasible, but there is no perceived value of that. So why would you implement such ones? Um, so um, so I think they have said that is a very important consideration, right? Where okay, if we implement AI, for we know the use cases, but where we should implement. So implement those which have a good balance of feasibility and business value return, right? So, so basically, they have seen value in terms of return in probably 3 to 5 years. Okay, they're not looking at short term. So that's not that you invest today and tomorrow you get the return. No, so they're looking at value in terms of impact coming to you in 3 to 5 years. And how long it takes implementation? Well, that depends on the complexity, but usually they are looking at something which could span 18 months. Okay. Now, this is a catch-all generic framework. Okay. It does not really say that this you can take and implement in Singapore or in London or in UAE or wherever, right? It's not market specific, it's not region specific. And so every customer has to take this maybe as a reference framework. Okay. And probably, tailor this more to their organizational context, because each organization is different. They may have their own point of views, maturity, and strengths and weaknesses. So they have to consider something as a reference, and they have to tailor their own use case portfolio. Okay, so again, this one is available in the Gartner website. If you have subscriptions, you can download this report and go through each of the use case, what they mean, and etc. etc. I pulled out a slight different table based on my experience of what I'm seeing most of the clients asking for from us, right, as a consulting firm. And just a high level view, I'm not going to go deep into it. But most clients, where they're asking us for AI, they're asking us to implement a help in building, agents, customer service agents, okay, who know, who are being trained through machine learning on the bank's products, policies, processes, etc., etc. And then they are augmented in your customer service function. So you as a customer log into the website or through the mobile banking or whatever, any channel, and the agent then starts addressing you. It's the first line of support. And it now we have seen the first time resolution metrics have also grown. So it means that it frees up your human capital to do more complex and more innovative things. The standard customer service efforts are handled through bots. Okay, so what we're seeing, the clients are looking for, they're looking for business value such as greater agent efficiency. They're looking to automate and therefore have more response accuracy and also quick response time, because a bot is available 24 by 7. You can just reach out to it anytime, right? So that sales and customer service function is where I'm seeing a lot of use cases clients are asking for. The second one is banks have a risk function. Risk is their primary business, right? So they have uh, something called as anti-money laundering and fraud protection functions. So what do these functions do? They essentially are like a, you can call it like a screening function. They observe the customers' transactions on their credit cards or online banking, and they look for suspicious behavior, like somebody doing money laundering activities and so on. That, and this is a big cost to banks because this is not a revenue generation. It has to be done for regulatory compliance, because central banks mandate that every bank needs to have a risk and mitigation, a fraud detection organization which can monitor customer transactions, and if they identify any fraudulent transactions, it's their responsibility to report to the central banks, the regulatory authority. So banks have to do that as a necessary function, right? It's a compliance function, so it does not generate revenue. So they want to minimize the cost of doing that, and they have to comply with regulations, and also they have to be efficient in identifying fraud, because the onus falls on them. So this is probably, I don't know if it is number one or number two, but in terms of one of the most important use cases, many banks are now started looking at using AI to monitor, analyze suspicious transactions, identify patterns and behavior patterns in terms of fraudulent actions, and thereby improve customer experience. Okay, that's number two. The third one is also slightly related to that, but obviously, when you are you are banking as a customer, when you're banking with a new bank, or even for a new product, even if you're existing, banks typically. So, for example, if you're applying for a new credit card or a new loan or whatever, the banks typically have to do something called as your KYC, uh, know your customer, and they have to do an underwriting process. The rationale behind that is they want to make sure that are you capable enough to take the credit card or the loan, and are you able to pay your dues. There is no failure, or in terms of ability to pay back your loans and dues, right? So they have to check your background, and this is a very, very tedious process, right? Every bank has a bunch of rules, and rules that have to be analyzed during the onboarding process, and it's a very data intensive process. Okay, and this is identified as one of the process which has not been, especially the underwriting, which has been very, very traditional in many parts of the world. And currently there is a push to modernize the underwriting process using data analytics and AI. So what it would mean for the customer, it would mean very fast turnaround in terms of applications. So if you put a new loan application, the bank is not going to just look at your typical data like how much bank balance you have, etc. They were looking at a lot of different types of data now to make sure that there is more financial inclusion. Hmm? and and you are able to get the loan which you deserve, right? You're not being denied a loan or access to credit because you probably belong to, I don't know, some specific segment, or you do not have enough bank balance. They look at multiple parameters now, and all this is being enabled through the use of AI. And I'll later on in the presentation, I will share with you an example of a company which actually is doing this very well now. Okay. Then the last element I wanted to highlight was uh, including IT. The whole life cycle of software development, is completely getting disrupted through AI, right? So you have the echo, right from requirements analysis to design, development, testing, and production deployment. Already there was a lot of automation with using DevOps, etc. But now there is very limited need to have very or a lot of programmers, right? So the lot of programming is being done through automation now, including and especially things like testing, and which are sometimes very cost intensive. All of these are now going to be dominated by AI. So you will see a lot of workflow and developer efficiency, and very short development cycles. In fact, the build, test, release cycles are going to get shrinked because a lot of it can be done through AI. You don't need to write code from the, if you have, even you write code in Java, C++, Python. Nowadays, you can just, through natural language understanding and processing, you can develop code on the fly. Okay. So this will help in reducing technology debt, which has been a major problem in banking sector. It will help go to the market faster. So if you are developing a new product to the for a customer, you don't have to wait for 12 months, 18 months to do the development testing and so on. You can reduce that to probably 3 months, 4 months, something like that, and you can launch your products much faster, right? So the in summary, I would say that while AI is definitely there for customer service functions, risk and compliance functions, the IT function itself is going to get completely disrupted through emerging use cases. Okay, now we want to talk a little bit about one use case, just to give a little more point of view in terms of how lending or loans, whether you are a individual customer, whether you are a SME, a small and medium sector company, you have a small business and you want to take a loan, or even if you're a large corporate house, right? So everybody needs, capital to function, right? Or to do their business. They typically, like you would see large companies take working capital from banks through a revolving credit revolving facility. And it's very, very time consuming. You have to fill in all these documents, and they keep doing the risk and underwriting processes, and then you get the loan. Even for large corporates, it's sometimes tedious. For SMEs, it has always been a pain because these are new startups, for example, who want to open a new business somewhere, and they need capital, and they have to they don't have a established credit history, and so oftentimes some of these applications, loan applications, get rejected. Similarly, for individuals, you go for a study loan or for some kind of a mortgage, etc. It takes at least 2 to 3 weeks at time to get this to get a credit, where it should have been probably taken a day or two max, right? So lending is one function. AI machine learning analytics is really transforming, and I think it will only grow. And therefore I wanted to sort of share with you, when I say lending, what are the typical challenges of banks, and when they are dealing with the lending processes. So first and foremost, and this is not numbered in any specific, it's just a list of 4 points, but I'll start with the first one is the regulatory compliance. So before banks hand out a loan to any customer, they have to strictly comply with all anti-money laundering and KYC requirements, right? So they need a bunch of documents, share your passports, ID, all your data. The customer keeps filling documents, and then they have to go and do something called as a background check. They have to see whether you have any previous suspicious transactions. So they have to go and check your credit rating. So they do a lot of background screening processes to make sure that this is the right customer who's eligible for the loan. So that's a really a big function doing this work on a daily basis. So imagine a bunch of investigators and processing officers simply doing this on a manual or even in a semi-automated process, right? So this is one area where it's very, very complex for banks. The other thing is, as I told you, right, this process involves heavy data. So the customer is uploading several documents, in different structured and unstructured formats, like images like passports and IDs and maybe credit reports, bank statements, and then actually filling the application. So there is a huge amount of data that every time there is a low lending process, onboarding process starts, the that is uploaded to the system, right? So this is a proper candidate for automation and data transformation. And then a third is risk assessment. The traditional underwriting processes that have been there in the banking sector is now getting, sort of, is now going to be transformed because it's involves processes and underwriting models which were probably developed 40, 50 years back, right? And they're still using those frameworks. So there is going to be, especially in insurance organizations, I see, insurance customers are still handing out new policies, but they're doing the underwriting processes in, similar to what they used to do, like probably 3 decades ago. So they have to transform this underwriting process, and AI is absolutely going to help there. And lastly, from a customer perspective, the customer experience is very important. I have often seen customers starting some kind of a credit card or a loan or insurance process on digital with a particular insurance or a banking customer, and then somewhere down the process they drop out. They drop out because they find the process of obtaining a loan for this from this bank is going to be tedious, and they drop out, right? So customer experience is very important. If you want a new prospect to be, or a new customer to avail your products and services, you have to make sure that it is very, very simple and easy for him to complete the process. If he is stuck with your internal bureaucracy and processes and legacy systems for completing a loan application, then he will get frustrated and he may switch over to your competitor. I'm competitor from the bank's perspective, right? So I think these are the key challenges. There could be others, but from my experience, I have seen that, you know, these four are the critical challenges that banks are constantly facing. Banks, insurance companies, and anybody that provides credit to the society, to the either it is B2B segments or B2C, irrespective. These are the typical challenges. And if and AI can help, and which AI is already doing, remove these pain points for both the banks and customers. I think you will see, lending being very efficient and access to capital would be very, very simple. Okay. Now, so what are these potential solutions? And there are probably many in lending, and but I have just picked up four important ones. So where I'm seeing customers typically, banks typically invest, right? So the first one is automation in the credit scoring, right? Now, typically, as you know, banks would, once you fill application, they will go and check with a typically a third party credit rating agency to understand what is your credit rating. Is it good, bad, and what exactly? And based on that, they determine how much loan you'll get, right? And this process is sort of done in the background, and AI can really help. Okay? They can really help in connecting to different data sources, identify different, patterns which have previously not been considered. So it can give you a more realistic picture of the credit, not just a rating from an agency and you just use it, but you can take a more wide perspective, right? So sometimes, so that's one area where customers feel that they lose out on access to credit because of a unfair rating, from coming from a specific agency. Okay. Then the second one is that now not every customer is same. Their needs are different, their backgrounds are different. So personalization is a uh, 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 very important marketing and sales initiative, okay, from banks, right? So they need to make sure that they're not offering you something very generic. They want to tailor down your loan to specific your needs, and the way you want the product to be structured, the way you want specific parameters of that product to be suitable to you. So every loan application is actually different. Everybody wants some personal attention. So here AI can really understand your profile, your background, and can then suggest to the banker that you need to tailor this offering in this way so that this will be more acceptable to the customer. Yeah. So personalization in lending is very important. Then then forecasting, predictive analytics, right? Forecasting will help you, and you can use this, using linear regression, and all these techniques in machine learning to to sort of forecast defaults. So for example, you looked at all the customer KYC. How do you determine, will the customer pay you back the loan on time, or there will be defaults? So using AI machine learning, you can really do a better job. Instead of doing manual or rules based processing, you can use analytics and AI to determine that, and then you can adjust your underwriting processes accordingly. Okay. And then regulatory automation, because obviously end of the day banks need to comply with central bank, as I said you. So they need to provide a lot of documentation and comply form filling also on their side to the regulator. This you can use AI to complete that aspect of the process as well, right? So what I'm saying in nutshell is that AI will enhance credit rating and underwriting through analytics, leveraging unstructured data for better risk assessment. That's point one. Point two is pattern recognition, which you continuously do. It will help you understand where is the risk of defaults, and you can continuously monitor, improve your models, AI models to do better forecasting, right? That is where deep learning comes into picture. And then predictive modeling would help you understand, okay, this is what I have in terms of scoring, etc., but how realistic is this? Can I do, forecasting and simulate other risk scenarios so that I can calculate the better default, um, default, default areas for the customer? And then I just said you deep learning. It's helping clients segment the risk in more better way, not just high, medium, and risk, but more segmentation. More segmentation models are emerging. Pricing is getting more tailored for specific customer. We talked about personalization, and then obviously improvement in terms of decision making. Okay. So I think that this is a big area, and I'll talk to you about a couple of use cases, not a use cases, but examples. How some of the leading organizations, uh, in the US and even now in other markets are emerging, who are entirely leveraging AI and technology to to deliver lending solutions. They're not following the traditional banking services. So Innova, you can look them up. It's a US based organization. They are a financial technology company. They provide loans. They started using AI and ML algorithms to completely automate the process of credit worthiness, which is basically checking your background in terms of whether you deserve this kind of loan, or you should get less, or you should not get less. So they are completely It's not a human driven process, very limited human driven. It's completely based on an AI model. Okay, it looks at different types of data, not just the credit rating agency, not your current bank balance, and it looks at different parameters, data, and including people. If you don't even have a credit history, it will do an analysis, and they have been able to give a lot of lend capital to the market, you know, and they claim, at least there is on their website, and that's why the internet says that this loan decisioning process is speeding up. They're taking very limited time to decide whether to give loan to a particular organization or a individual or not. The default rates have reduced, which is a great sign, because if you're depending on machines to make that decision, then the efficiency or the quality of the decision making is in the default rate. So if your default rates are coming down, which means that you are taking the right decisions, and then they're also able to personalize offerings, right? Now, so the great example, you guys, I would suggest, please look up Innova in the public domain and see their website and how they're doing business. Then another is, we talked about credit ratings, right? So FICO, which is a Fair Isaac company, it's again a US-based organization. Now, it is completely doing credit risk assessment. Okay, very similar to Innova, but they mostly focus on credit scoring and fraud detection. Okay, they're completely using AI for doing this. So not done through the traditional human-led or risk rule-based processes. Okay, and they claim that they are seeing results. There in terms of fairness and transparency of credit scoring. So they have eliminated human bias in the lending decision, which is a great thing, because sometimes AI is accused that you sort of propagate the human bias already there in human beings, and you put that into the machine starts doing the same bias. For example, should I give credit to a certain demographic segment? Should I give loan to certain credit rating, well, which is probably not right. So that there's a human bias that gets perpetuated in AI. We will talk about fair and responsible AI, where we can eliminate those processes. But FICO actually claims that they have eliminated human bias in their lending decision, which is a great thing. And the other thing is they're talking about enhanced fraud detection, which means that they are able to prevent fraudulent activities even before they happen. Sometimes individuals take or corporates take loans and misuse them for fraudulent activities. So FICO claims that they have been able to reduce and prevent those activities. And lastly, important thing which is emerging as a big standard, in AI is they're using synthetic data. So, we want to prevent AI machine learning models to not use real data, because real data, again, it can be flawed, erroneous. Many issues are there in data, including bias. So, if you have biased data, the AI will produce biased outcomes and decisions. So FICO has been able to use what they call a synthetic data. Synthetic data is it's not the real data, but it is prepared using real parameters, and it eliminates ethical bias, data quality issues, and which can be used to train this machine learning. So look up for synthetic data. This is now becoming very important for uh, machine learning, because machine learning is all about data and training, right? So if you have access to synthetic, you can buy this data in available also to train your machine learning models. Okay. All right. So we talked about two things, right? We talked about where the industry is uh, steering towards in terms of adoption. What is the perceived automation and augmentation data. We talked about that. Then we talked about okay, which use cases are becoming popular, and where banks are typically picking up candidates for automation. We talked about lending as a one of the examples in more detail, and we talked about a couple of industry use cases. But how do we approach implementation of AI? That's what my clients work, right? Most of the clients are still, testing waters. They have not really uh, implemented much in production environments. They have doing some pilots, some experimentations, which is important, but very few have put anything in production for various reasons. Security is one, we talked about in the previous session. Risk and ethics of AI is second. So people are clients are still, uh, this is still early days, but it is going to change. It's going to change. What they're looking for is uh, appropriate frameworks and adoption strategies. Okay, and so in this final section, I thought, maybe I'll just give you a high level view of what what uh, what those adoption strategies could look like. So, again, this is based on our my organization's research, and I'm giving you some very high level view of that. So we start off looking at, okay, what is really preventing organizations in adopting AI. Okay, and we obviously looked at several organizations across the world, and we found that in 56% of the case, okay, the companies feel that there is very limited external ecosystem maturity, okay, which means your suppliers and technologies available, which restrict their ability to accelerate AI initiatives. So they're not yet fully confident that there is a good marketplace of suppliers and products and technologies that can give them the the technology and data capabilities that they're looking to order to adopt AI. Right. So that was one big piece of the pie. The other one, second one, was ability to prove ROI. ROI is return on investment. So about 53% are saying that they don't know how to quantify the benefits. How to quantify the benefits, okay, of implementing AI, right? And it's very hard. Still, it is very hard. So that's one of the reasons why they are still going slow. Okay. Then the next one is trust, ethics, and regulation. I told you, right? I mean, I don't know if many of you remember. There was a global organization, I think probably Amazon, if I'm not mistaken, who started using AI for hiring decisions, and after some usage, they found that the AI was hiring wrong. And very biased workers, right? Which is what a human being typically does. They based on race, color, identity. You have bias, right? So the AI was perpetuating that, and they immediately stopped that, right? So AI explainability is becoming a major thing. How does it? It sort of functions sometimes as a black box. So it is imperative for AI solutions to have the ability to do what they call as responsible and explainable AI. The model should be able to tell you, and you should be able to audit and find out how exactly it has produced the decision or the response that you've given after prompting, right? Because if you don't know, you don't know whether it is hallucinating or there is bias and so on and so forth. So that is one of the reason most of the organizations are not yet comfortable adopting it beyond POCs or pilots. And the fourth one, obviously, this is, I don't know whether it's a good news or bad news. Talent and culture. In terms of talent, it is availability of AI and machine learning experts who can build these solutions for the bank. And in terms of culture, I think a lot of pushback is there still for automating. Because with every new technology, there is always a change management, organization and change management that needs to be done, right? So these we see are the four key types of obstacles. And so therefore we are recommending clients to go in a approach that we feel, right, will be will not put them in tremendous risk, but they can go in terms of approach which is based on business value and organizational maturity. These are the two dimensions which we feel are important to consider in your adoption strategy, right? So first and foremost, we are telling them clients, before you start doing anything, let's just do a AI strategy and readiness assessment, right? Let's understand your current state. What is your vision? What's your business strategy for the next several years? Where are your pain points? What is your current maturity in your technology, data, and policies? And then we devise a multi-year roadmap and strategy for adoption. Okay, so that's like a foundation. The next is, which will give you very short small benefits, but it will not give you too much, or not expose you too much, or the risk will be minimized, is what we call as horizon one, experimentation. Here you are basically experimenting with different AI models, okay, probably for a few use cases, and you're not implementing anything in production. Okay, you're doing it still at a POC pilot level, but you are exploring different use cases to understand where is the risk, where is the value. You remembered about the Gartner prism. So basically, to do that, to identify your particular portfolio of use cases measured by value. Okay, and then the next stage is horizon two, expansion. Here you are basically accelerating. You carry on your experimented use cases to production. Okay, and this will start giving you maybe one or two critical use cases, which will give you more competitive advantage and differentiation in the market. And obviously, once there's you have that, you will have more dollar value and returns on investment. And then obviously, which is the end state, is where you are leading. That will take probably some years. Is when you are actually using AI to make new revenue streams. You are making new products, new services. You are acquiring new customers which you never attracted. So that's when AI gives you the maximum benefit. But that will be years from now. Okay, we have not reached there. So I think organizations, in nutshell, I would suggest that start with the readiness assessment first, and then try to endeavor to increase your maturity and value from experimentation to expanding, with a view to reach leading stage in a few years time. Okay, so my final thoughts, and before I'll take some questions quickly, right? So, 3 points I want to leave you with. One is AI's impact. It is definitely transforming financial services, in terms of efficiency, customer experience, and corporate performance. Okay, challenges remain, and majorly is terms of how to measure ROI, how to navigate the regulations, and how to prepare the workforce for AI driven. We talked about this. And then, what are the strategic priorities? They should first adopt flexible technology strategies to keep pace with advance, because this technology is fast evolving. Every day there is a new version of ChatGPT, etc. So your technology strategy has to be very flexible. Data sovereignty is very crucial, right? You have to comply with data privacy and security. It's a subject on its own, but it's very, very important that data privacy breaching and security breaching should be absolute focused on. AI governance. How do you govern the use of AI? How do you manage the risk and ensure responsible AI? That's very important part of your strategy. And AI should not be siloed. Right? You don't put it just on one function. You should be a cross-functional across all your departments. And in terms of lastly the success factors, I think you need to start measuring the continuous mechanism to monitor the impact aligned with your business goals and obviously the society at large. Adoption varies by market, right? So you have to look at what AI infrastructure is available in your market. Sometimes these big cloud and AI providers, they don't have the equal level of service offerings in different markets and regions. So you have to see what's available in your market, and you uh, prepare your adoption and deployment plan, keeping in line with that availability. And then finally, a responsible forward-thinking approach needs to build trust, right? If people are not having trust in their technology, then it won't create the business value that we're looking for. So, in nutshell, I would say AI presents, both an opportunity and a responsibility, and therefore financial and banking leaders must embrace innovation while ensuring ethical and strategic implementation to drive long-term success. Yeah. So these are my final thoughts. With this, I come to the end of the presentation, and I'm happy to take any questions uh, and pause here.
Thank you, Sukant. Especially, I will say about your presentation, the deeper insight that comes from your over 2 decade of experience in the financial sector about the AI adoption. You started from statistics, then gave about the investment, AI adoptions, what are the applications, risk factors, and also about ROI. So there are lots of things we came to know about the financial sector, also the challenges we are going to face. And all these are very important to know. I mean, let's say we want to adopt any AI application in financial sector. Still, I have the way you said, like most of the banks only they are just doing POC or some kind of like still on testing, but we see very less implementation for the client facing interfaces. uh,
Yeah.
Thank you so much for this deeper insight. There are a few questions. I'll take quickly those here. So one question is, I think you already mentioned about this one, like AI, how AI driven credit scoring work, and what are its potential biases?
Yeah, that's a very good question, and there's a lot of research on this, and I'll try to see if I can give a very sharp answer to that. You see, especially in different markets, when customers approach, some of you might have your own personal experience. More often than not, a loan application is rejected, right? On the grounds of sometimes genuine data, sometimes very frivolous data. Oh, you don't have any credit history in this country, you are new, so you cannot be given a loan. You have defaulted in your credit card payments once or twice, so your loan amount will be less. And that sort of sometimes, while is very traditional, modern age, it is not resonating well, right? So what we are seeing in the market is banks are looking for more alternative data to do the credit scoring, not just your past transactions or your credit history, but more things. For example, they're now looking at, okay, how long you have been employed within your organization. How long, what is your buying, your mobile telecom expenses. There are different angles economists are proposing, which look beyond those traditional data points in assessing credit scoring, right? So that the human bias that is there, in terms of not granting loan to a farmer, for example, or to a certain section of the society, or not giving adequate credit for what probably you need like 50,000, but the bank is only offering 10 because of these biases. So there are some known list of biases in the banking sector. And I think AI can look at a variety of data sources and make sure that the decision of granting the loan is more comprehensive than very narrow.
That's true. Actually, I'm not in banking sector, though I have developed a loan origination system in my past, and we had our module called credit scoring,
Yeah,
which depend upon several, history of the one who is applying for loan. So
absolutely.
it's very hard to calculate the scoring based only on those data. So you said like there can be several other data points. It can be depend upon, for example, maybe his mobile expenses or number of years he has employed, so on. So I think AI can also play some role here, but still it's very hard, I think, for AI to do this credit scoring.
Absolutely. So it's still evolution, but as I told you about a couple of organizations like Innova and FICO, they've already started leveraging AI to do that. So it's now in the real world. But what we want to see is more banks adopting that kind of mindset and not sticking to legacy processes.
Okay, so thank you for this. Still, there are a few questions, but I'm running actually out of time, and then another
Yeah.
speaker is already here. But quickly, I want to take another one question that guy has asked. What are the ethical concerns of AI in financial decision making? Ethical concerns.
Well, ethical concerns are many, right? So first of all, I mean, we just talked about ethics in lending, right? So, not giving access to finance, to the people who really need that, and depending on our known bias methods, or our preferences to grant loans is something the new AI should not perpetuate. Okay, so I would say that's number one. Second, in terms of ethical use, right? You're probably not going to use AI to give loans to do fraud, right? Money laundering, right? So these are things that the traditional banks used to do because of lack of processes and controls, and to control the bias. I think the big responsibility for AI is to make sure that these kind of ethical concerns are addressed in adoption right from the beginning of developing the solution, not as afterthought. So there are several ethics. I don't have the list of that to address, but I can probably share that later. But it is basically there is a big research going on in terms of how do you identify those ethical issues, how do you make sure that those ethical issues are not inbuilt into the AI solutions right from the design, and how do you stick to responsible and responsible AI from the beginning.
Yeah, that I think that satisfy this our the audience who has asked these questions. So once again, Sukant, really thank you for your wonderful session, especially coming from your over 20 years of experience in financial sector, and giving this insightful thought with actual research data. So thank you so much for this wonderful session.
Thank you, Rizwan. Thank you so much to the entire panel and organizations for having me. It was a great privilege, and I look